Hello, everyone, and once again, this is Dr. Forex. It's been a while since I came out with another video. Um, in this video, I just want to do a study on Gbpjpy and share my thoughts and some observations on this pair as I've been documenting. And basically, so let's just get right into the video. You want to like, share, subscribe if you are interested in content like this. So hopefully you learn a thing or two about Gbpjpy if you want to trade it. So this year began somewhere. So by the way, this is a 4 hour time frame. Okay. And I did the very first analysis on Gbpjpy I did will give you a lot of preview to where the pair was when where we are now. So I'll not be making much reference into what from the higher night time frame perspective, but it's more of a study. Okay, so we are just analyzing why price did what it did at what point in time. So I'll be scrolling between the 4 hours and then the smaller time frames, maybe like 15 minutes or 30 minutes. Yeah. So I think this year started somewhere around okay, this was I think okay, so this is at this side we are December. Okay, so yeah, this was 31st. This was 31st. So this was like yes. So from this side it's like 31st. Okay. So prior to that, you see price pushed all the way up, right? So consistent break of structures to the upside, right? So price bought from this bottom here all the way up, right? Then immediately it got to this point, it started selling off. Okay, so the question now becomes, why did price buy from this bottom here all the way to the upside here? Now at the bottom side here we have an order block, right? This area mark, that's an order block. So how do we know that it's an order block? Because it actually led to price breaking multiple structures to the upside, right? Then again, if we try to look to the left, okay, we see that there was an immediate downtrend, right? The moment it ended, we have a break of structure against this previous lower high, right? So that is a lower high. Um, so let me just label here. Uh, sorry. So lower high, right? Let me just give it 12. Okay, so this was the lower high. If you consider this downtrend, okay, this was the lower high. Then price broke this after this red candle printed, it broke this high, okay, and created. So over here, we have like a change of character or a shift in market structure, right? And if we look to the left again from that side, you see that this lower high, okay, if you look to the extreme, you see that that price area was a strong support area that led to price buying all the way up, right? So when price got here again, it respected that order block and then broke structure again and then bought all the way up, right? Bought to this high. Okay, so bought to this high. Let me try and mark it. So it bought to that high, right? And immediately got to that high, it began to sell off. So if you look to the left again, you can see that there is an order block that price respected. Okay, there is an order block, um, and this is that order block. So let me use so this will be the order block, right? So you see how price tipped into that order block and then began to sell downwards, right? But then again, um, if you are looking to, if you are studying this by, sorry, if you are studying this by from the bottom to the top, after the change of character happened over here at this side, okay, after the change of character happened over there, you want to see consistent break of structures again. So this would have been your next, this point would have been your next break of structure, right? So I trade structure and liquidity. So basically I just look out for um if I'm buying, I want to see break of structures to the upside, and then I want to see liquidity at on the upside that price is moving to take, and then I trade in that direction. That is what I do. So this is a break of structure. Okay, and usually I like to see two breaks of structures ideally. Okay, so this is a break of structure to the upside, right? Then we see that when price broke structure, okay, it's created this low here. Okay, let me mark out that the low for you to see. It created this low. So once it creates that low, I'm looking for price to take that low, right? So someone might call this, so this candle, someone might call it an order block. Well, you might not be too wrong, or you're not wrong. Okay, so that low has liquidity under it. Okay, so price just came into it, okay, and then tapped into it and went. So I said that usually I'm a structure and liquidity trader. So I want to see price break structure at least twice. So first clue for me for a buy is this change of character over here on this area. It's change of character for me in this area because when price took out this lower high, okay, then now price has broken structure again. So now I know that price wants to buy. Now the next question is that what is the liquidity that price wants to take on the upside for which it's now going up? Now I have to get that information from the previously ended trend, which happens to be this downtrend. Okay, so this high is a liquidity area. Okay, and also this is also a liquidity area. All the way to the top here is a liquidity area, right? So now that I've identified my liquidity areas are going to be my take profit areas, right? So a potential area for take profits is going to be here. Okay, another potential area is going to be here, and that potential area is going to be here, right? So once I identify the trend, I just look out for a break of structure, okay, and then I look for liquidity that price is going in that direction to go and take, and then I put set it as my take profit. So you could see how if you place the buy limits just here, okay, if you place the buy limit just at this side, you could have gotten a good risk to reward trade. Let me see. Yes, so you target either this liquidity or that liquidity. Sorry. So you can just target that liquidity. Okay. But you see how in that one it didn't really get there. But let's see. So in this case, your stop loss, well, yes, your stop loss is okay. Um, yes, so that's it. So that's it. That's just about it. Maybe you might want to go to a lower time frame to refine. Okay, you might want to go to a lower time frame to refine your stop. Okay, so that is it. You could have your stop loss must be in a position that if it gets taken, it means that your trade idea was wrong. So this is just 2.54 risk to reward. Okay, but so that's it for the first one. Okay, so just look out for liquidity sweeps. Now, when we got to this high, okay, price began to sell off, and pay attention to this candle that pushed all the way up. Okay, this bullish candle, it created this massive push to the upside, created what is known as a fair value gap. Okay, created what is known as a fair value gap. So usually when price creates a fair value gap, okay, when price creates a fair value gap, market algorithm will fill up that gap. So when price created this massive push up, you see that price filled this gap, right? Now fair value gaps are also liquidity targets or liquidity areas. Okay. So when price just tipped in to fill this liquidity, now continue to the upside. Immediately go to the upside, it took liquidity on top here, okay, and then sold off. Now as I'm watching, okay, I am paying attention to what is actually happening. I see price create this fair value gap, filled it, went up, took out liquidity, and now come down to this level. Now at this level, I see a break of structure, right? I see a break of structure from this side. Okay, price broke this level. Okay, and then price also broke this level. So now I can see two break of structures. I know that the market structure has been shifted now. Okay, so so we have two break of structures. This one to the downside, right? So I know that, and then there's another one to here. Okay, that's the other break of structure. So once I see that, I'm preparing to sell. Now, what other confluences for a sell do I have? Given the fact that this area is a resistance area because price sold here, we got, if you look back in time for price, you see that that area, this blue area here, okay, you see that that area has been a sell area. Okay, so now I see a break of structure and then another break of structure here. I'm convinced that a sell is imminent. Now, one thing I said, structure and liquidity. So I've seen price break structure to the bottom. Okay, right now my next question is, what is the liquidity that price is going to take for which it wants to move to the downside? Once again, I get it from the previous trend, which was this bull around to the top, right? I see potential target areas here. Okay, there's this is one, this is another one. So one, two, three, right? But after this break, you can see that this first target has already been used, right? So look at what price did. Immediately price took out this liquidity, it went up again and now took out this liquidity, right? When we took out this liquidity, it filled up this small fair value gap. There's a small fair value gap here. I did a video on this setup um, on the channel on this same. It was on this pair as at the time it was about to happen. So you can just check out that video on the channel and then you would see everything. So immediately price took out that liquidity on top here, this inducement high. Okay, price took it out and then filled this fair value gap. It was ready for the sell. And look at, if you targeted this liquidity area, you would have gotten a good trade. So let's see how that would have played out. Um, if you were to sell, so you put a sell limit over here. Okay, put a sell limit on the liquidity, like at the fair value gap area, and then your stop loss um, just above that high, and then your TP is target just this liquidity, right? You have a 5 RR, 5.15 risk to reward, which is a good trade. Trade even went a bit further, but just target that liquidity and then you have a good trade. And this is on the 4 hours time frame. And that would have given you how many pips? So that is that's almost 700. Okay, 766 pips. Right, that was like, that could be like a whole week of sales. But what did it take for that to happen? It took you to wait for these break of structures to happen, wait for liquidity to be taken out, and then and then you take the sell, right? So that is what price has done. Now when price got here after this huge sell, when price got here, it retraced a bit, touched on this other block, right? Immediately touched on this other block, right? We can see that this at this time, okay, when price created this low, this thing, you can see that it's a break of structure, okay, to the downside. Now, after this break of structure, there is some form of confusion as to whether it's a break of structure or it's a liquidity sweep. But if you look at it, it's a full body close. Okay, there are full body closes below it, right? If you go to a lower time frame, you will see you see these candles to be very huge. So when price got there, actually there's also another video that I did where I said at the time on this same channel that this low will be taken out. Okay, but it didn't look too obvious. So usually one thing I've noticed about Gbpjpy, it likes to do this trap. It will break structure once, right? And create an inducement low. Then that structure, that low will fail to hold. And then liquidity will be taken above it. And then now it will sell off and take out that low. That's what has happened over here. It created this low, right? Ideally, if you're expecting the downtrend to continue, you'd have expected that at somewhere here, when this high is created, price will push down further, right? And then you expect that maybe if price comes up somewhere a bit, then it will push further down. So typically, this is what you would have been expecting. That price was, let's say, price is selling like that. Okay, so then it will create this thing like this. So it will break like that, right? And then you're expecting that when it comes here like this, okay, um, so I did this what you'll be expecting, but it didn't do that. It rather did this. Um, um, so usually this is what you are typically expecting, right? But look at what happened. It will rather do this. It will rather create that low. So it will break structure once to the downside like that. Then instead of coming down and creating the second one, it will rather come up, take liquidity on top here with this inducement high. It will take liquidity from there and then now come this way. That is what happened. That is what happened over here. So you can see that price did what? So you can see price like this, right? Then so this break of structure, price of broke structure at this side, right? Broke structure here. Okay. Then it broke again by creating this low. Then instead of it to come somewhere here and then break further down, it didn't do that. Rather, it rather came to take out this high, right? Took liquidity from further here at this side. Then now take out this low. So by being at that, look at what it did. It played around a bit and then took it out. So there's also another video on this channel where I did one analysis and I said that this low was going to go away, right? So you can also look at that. So one thing about being specific with one pair that it enables you to study that pair in totality. Okay, it allows you to really understand that pair. So um I think I'd like to end here. I would like to encourage that you continue to look at the charts, to continue to study, and make your own notes and documentations of the pair. So I would do another analysis of this pair, what I'm expecting. Um, so this is the end of this video. If you like content like this, like, share, subscribe, so that you would be alerted when something like this is posted again. So until another time, bye bye.